Hello, hello, hello. Good evening, everybody. Today is a Q&A strategy, MCQ, and essay practice session. I'm going to give you 3 multiple choice next to each other. I'm going to give you 5 minutes, exactly 5 minutes. I'm going to pause I'm going to mute myself and pause the video so that I don't distract you in any way. You have exactly 5 minutes. You're going to solve these 3 multiple choice questions. Start with the easy one. I don't care in what order you finish them. And once the 5 minutes are done, you need to solve all 3. If one of them is not done, choose a letter and post it. I don't care in what order, but I need to see your answer. You can put 2 is A, 1 is B, and 3 is C. I don't care. Okay, whatever. But I need all your answers. Everybody should answer. I need to see that. I want you to start practicing as of now. You have 5 minutes, 3 questions. Go. Post the answers in the questions tab. You need to answer all 3. Time is up. Come on, everyone. Number 1 is B, using the indirect method. Cash flow from operating activities. With the indirect method, we start with the net income and we perform all the adjustments to reach our operating cash flow. So amortization expense is a non-cash item that has to be added back. Cash dividends paid to common shareholders is a cash flow from financing activities. Thus, it does not affect our operating. Net income is our starting point. As we mentioned, work in process inventory. Inventory is a current assets, working capital. So if it went up, I need to subtract it. Gain on sale of equipment is the cash flow from investing activities. It should not be part of our operating activities. So since it's a gain, I have to remove it. I have to subtract its effect, and thus I would reach $1.3 million. Number 2, which one of the following transactions would affect retained earnings but not additional paid-in capital? Declaration of a small stock dividends affect both. Okay, decrease in the value of an available for sale investment would affect our other comprehensive income, and it won't affect any one of those. Impairment of the long-term asset. This will result into a loss. A loss would reduce our net income. Our lower net income would reduce retained earnings without any effect on additional paid-in capital. So that's the right answer. Okay. Now, number 3, how should the company record this new development in this current quarter? A multinational company maintains its financial records under both IFRS and US GAAP. Last year, the company determined its inventory was impaired because demand of its product collapsed when a competitor launched a new product with innovative features. As a result, the company wrote down its inventory to zero with a carrying amount of $500,000. That's the cost of the inventory. This year, however, government authorities unexpectedly announced that the competitor's product was defective and the product was removed from the market. As a result, the company products were again in demand, and the company estimated their net realizable value to be $750,000 at the end of the current quarter. How should the company? Now, we know under US GAAP, once you do an impairment, you can no longer reverse that into a gain later on, even if the situation changed. But under IFRS, we know that if the situation changed, a reverse is applicable up to the original cost. Although it went up to $750, I cannot go above the original cost, which was $500, and thus the answer of number B. So under IFRS, I would write it up back to 500 with a gain of $500,000. Under US GAAP, I do nothing, and that's the right question, the right answer. Okay, everybody? Now, how do we approach an essay? Some of the strategies of multiple choice still applies here. Number 1, you don't read the given. That's a big given. If you're going to read the given, you're going to waste a lot of time trying to memorize and trying to retain all of this information. And again, you don't know what to do with it. That's a big problem. The second problem is once you're done and you read the first question, unconsciously you're going to go back and read all the given just in case you missed some information. When you read the second question, you're going to do the same thing, and definitely you won't finish your essays on time. So the first thing, disregard the given. Number two, read all the questions, understand everything that is required from you, then read the given. Number three, some of, or actually most of the questions, not in our case here, but usually most of the questions are general questions. It means they are questions that are set to test your knowledge, which means that these questions won't have the answers in the given. So you won't find the answer to these questions in the given. Okay, these are set, even if you read the essay 100 times, you won't find the answer. These are set to test your knowledge. So let's take an example. Identify and describe the 4 types of responsibility centers. Even if you read the given 100 times, my advice, answer that on the spot. You're gonna know it. You're gonna know that this is a general question. So I automatically answer in bullet points. Always answer in bullet points. Do not answer in a paragraph. Because if you answer in a paragraph mode and your English is not that good, your grammar is not that good, you're not systematic in your ideas, you're not clear, whoever is correcting the essay might not understand what you're trying to say, and they might consider all the essay as wrong. So we want to avoid that. So bullet points. So in this case, actually, it's easy. By default, it should be bullet points. So you put, the first one is cost center, whereby the manager is responsible only for cost. The second one is revenue center, whereby the manager is only responsible and held accountable for generating revenue. The third one is profitability center, whereby the manager is responsible to increase revenue, manage cost, and generate higher profits. The fourth one is investment center, whereby the manager is responsible to generate profit and manage investments. That's what is going to be held accountable for. So by now, you have answered 25% of your essay, one of the 4 questions, whereby your colleagues are still reading the given and getting more stressed. There's a lot of information. What should I do with this information? I'm already tired after 3 hours of multiple choice. That's going to be built on pressure. So we don't want that. Then I jump into number 2. What type of center do the 3 retail divisions of Blue Mountain represent? So I know now I have 3 divisions, and they need to know which center they are. I already know what to look for. Number 3, how should Blue Mountain allocate the fixed expenses when evaluating the performance of the 3 retail divisions? So I need to look for the fixed cost and see how it relates to these 3 divisions. Number 4, calculate. When you see the word calculate, always show your work. Show it step by step. Even if they don't mention show your work or show your calculation, always show your work. Calculate the contribution margin for each division. When you see such a question, before reading the given, write the formula. So contribution margin is my revenue minus my total variable cost. I get contribution margin. Write the formula before you start with the question. Now, what's the approach? I'm going to give you 10 minutes exactly. Within these 10 minutes, you need to read the given and answer number 2, 3, and 4. They are easy, straightforward. And you're going to drop me the answers in the questions tab. After that, I'm going to go through the essay and show you how to answer such questions. Hello, we're back. I'm going to start reading the given while I wait for the rest of the answers, if there's any. Blue Mountain operates retail stores throughout the United States. Blue Mountain has 3 divisions, where each operates their own independent retail stores, apparel, shoes, and sports equipment. The manager of each division is responsible for the revenue and costs of the division. So up to now, that's a profitability center. All investment decisions are made by the corporate headquarters, so no investments. So I answered number 2, all 3 are profitability centers. Blue Mountain has a history of financial success until last year when it incurred a net loss of $250,000. President Bob Johnson does not understand why the company incurred the loss and has assigned accountant Hillary Ryan with the job of analyzing the results. So we have all of this information. Now, also we have revenue and variable expenses. If I subtract those two together, I get the contribution margin of apparel, contribution margin of shoes, and contribution margin of sports equipment. I already answered number 4, as easy as that. I'm still missing number 3. Ryan analyzed fixed expenses, and they found that $1 million is traceable to apparel, $750 to shoes, and $1.5 to sports equipment. Now, if we look, fixed expenses in total, we have 3.75 million. 3.75 million. So if I add those that are traceable, they add up to be $3,250,000. Which means that this 3.25 million is going to be allocated when we are assessing the performance of the managers to each one as indicated here. And the remaining $500,000 that is not traceable will be disregarded. And I've already answered number 3. That's how we approach an essay. Okay, that's how we approach an essay. And those are the answers.